Hello and welcome to another episode of From the Helm here at Bell Financial Group. I'm Grady Wulff, Senior Market Analyst with Bell Financial Group. Omni Bridgeway, ASX OBL, is a company that specialises in legal financing or litigation financing, whereby they fund the legal costs in exchange for a share in successful settlements. Today, I'm thrilled to be joined by Raymond van Hulst, the company's CEO, to discuss FY25 results and, of course, the outlook for FY26. Raymond, thank you so much for joining me today.
Well, thank you for having me.
And so for our investors who may not be familiar with the OBL or Omni Bridgeway story, can you give us an overview of the company and what you've been up to over the last 12 months?
Sure. So Omni Bridgeway is a provider of legal finance, or as we call it, an investor in legal assets. And essentially, we provide funding to law firms and to their clients or claimants to provide them with the funding to bring their claims. So essentially, that's capital used to pay lawyers or experts or court fees or anything associated with that. We do that on a non-recourse basis or a risk-sharing basis.
Yeah.
If the legal proceedings are lost, we lose our investment. If the legal proceedings are successful, we get a return out of the proceeds.
Okay.
We do that globally.
Yeah.
So we're in 15 countries, 20 locations. And if you look at our global book and our team, it's really equally spread out over the world, about 1/3 US, 1/3 APAC, and 1/3 EMEA. We've been doing that for 35 years.
Wow.
And essentially only legal finance. And we're really proud of our track record. We win about 70% plus of our investments are successful. And overall, our multiple on investment is about 2.3 times, or in other terms, our return on invested capital is about 130%. That's good. Those are good.
High.
Those are good returns,
Yeah.
risk adjusted, because we run a lot of risk.
Yeah.
But what's really interesting, we think, is that these assets are non-correlated. A legal asset is the outcome of it is only defined by the court, unconnected to what the financial markets do or what the economy does. And similar with the timing of when it completes is connected to court proceedings and not to whether there's an upswing or a downswing in the capital markets.
Commodity cycles or anything that you kind of have to deal with.
Exactly. We don't have that. We do that as a fund manager. So we started 35 years ago as a balance sheet funder. We did all of this on balance sheet. But we've switched about 8 years ago to being a fund manager. So if you look now at us as a company, we're a listed GP. And our business model is that we get management fees, carried interest, and importantly, a co-invest. We invest 20% alongside our fund investors. So whenever an investment is successful, we get that co-invest profit on it.
Yeah.
Maybe good to explain a bit about our clients and
Yeah,
why we exist.
Sure.
I mean, the legal system is an important element of
Every jurisdiction.
But also of society. But it's not perfect because it's quite expensive. If you're kind of in David and Goliath type dispute, either you're not able to access the legal system or you can't do that with the same financial means. And that's where we come in. We provide that capital. And we've just done a study on it. About 75% of our cases, our clients use us for that purpose. So being able to access the court system. The other 25% is where people use us for risk management purposes, or they like our skills to navigate the global legal system.
Yeah. Awesome.
So that's kind of Omni Bridgeway in a nutshell.
Yeah, it's great to hear in investors, I'm sure, in the market, there's not really a well-known area or diversified area for investors to get into. You don't hear of it a lot. So It's good to know you're such a player in the game for investors to consider investment in the new financial year. Now, how do you evaluate the cases you take on? Obviously, there is a lot of risk associated with taking on any case, and I'm sure you get so many at the forefront of your mind. What makes for a case that you're willing to invest in compared to a case that you wouldn't touch?
Yeah, no, you're right. So we accept on average about between 2.5% and 5% of all applications that we get.
Very few.
So a lot of our capacity and resources and time is spent on filtering out those 2.5% to 5%. Well, first of all, the way we're organized, we have global teams. They're specialized by either area of law, international IP or international arbitration, or by region, Canadian law, American law, Australian law. And then while these teams analyze the cases, they essentially focus on a number of key risk areas. First of all, I think everybody will understand that is the probability of success. Yes. How likely are we to win that case, or is our client likely to win that case? But after that, it's about the quantum. So how much do we think will be awarded in claim amount or in damages? How long do we think it takes? That's quite difficult because the defendant can go into appeal. Courts may take longer or shorter. The defendant may be using all kinds of tactics to delay. So duration is a risk factor for us. A budget, which is connected to that. If a matter goes into appeal, our funding needs to be larger. If it takes longer, it typically is larger. And then the last thing, but not least, is if we're successful and if our client's successful, how likely is it that the defendant will actually be able to pay and be willing to pay voluntarily? And if not voluntarily, are there sufficient means to kind of legally enforce the judgment? So those are all the areas that get evaluated. That gets done by our investment management team, lawyers, and financial brains put together. That gets all modeled out, priced, structured. That goes to an IC with external members often. So we vote on it internally, but then we still have an external IC that looks at it. And if that all is well, then it gets into that very selective group of 2.5% to 5% that we invested.
Your results out recently for FY25 outlined revenue significantly rose in FY25 to $471.2 million. Not only talking about income more than tripling, NPAT soaring to $30.5 million, and just a really, really strong year. What do you attribute this to?
Well, we had a good year. And I think at the top of the pyramid for us is always how well is our portfolio performing. So we had good investment completions, and we achieved 2.5x MOIC on our 60 completions. So that is always the most important part, the first thing we look at. At the same time, we managed to hit our target on income growth from management fees. And we managed to reduce our operating cost, exceeding our target. So those are kind of the main points.
Expansion is what we want to hear.
Always good.
But
I think the key thing for this year has been what we call our Fund 9 transaction, or the Ares transaction. That's been a real milestone and transformative transaction for the company. To explain it, I think I have to give a little. I'll have to give some context, because what happened with the company is that we've been growing very fast historically. So over a couple of years, 30% annualized growth in our book, so in our co-investments, but also in our team. So we expanded globally, built those 15 countries. But a little bit unhelpfully, our accounting system was still based on that balance sheet model, and we were carrying our investments at cost. So as an investor, you would look at significantly increased cost, but our book wouldn't reflect the increase in the value of those investments. And while we had financed this with debt, the investors saw the debt increasing. So that started to create some pressure on our share price. So one of the things we've done is to transition to fair value, which is the standard for all of our peers in our industry globally, and also for the asset management industry more generally, which looked really good. So we published that for about a year, and it immediately showed that our value of our book had grown significantly, and that we were trading at this very significant discount, significantly over 50% to book, compared to that fair value. The problem, however, is that legal assets are not traded frequently, and there's no Bloomberg page that shows this. So there was a bit of an aspect of marking your own homework on this, and that's when we set out to do a third-party market transaction where essentially we would find a very reputable party that would do deep diligence on our book, and we would do a material transaction with them on the basis of that fair value. So essentially have them mark our home book or our homework. And that's exactly what happened. So we sold 150 assets into what we call a continuation vehicle at a very good fair value conversion. We had a 3x MOIC, so 200% return on invested capital. And quite importantly, we realized $320 million in proceeds out of it, which we used to repay our debt. So today we are debt-free, completely deleveraged, have a strong balance sheet, and a validated book.
What a turnaround.
Quite a turnaround, indeed.
Absolutely. And investors love to hear debt-free environment, especially after the high interest rate environment we've just been living through. So congratulations on that outcome. Why should investors consider an investment in OBL, or like what diversification does it bring to an investor's portfolio?
Well, I think first of all, if you look at the company in itself, we're unique. There's no company like us where I'm not Australian, as you will have picked up, but we're strongly Australian, Australian roots, but truly global, perfectly diversified. Our assets are uncorrelated, which is a very important feature these days in the current turmoil. Having uncorrelated assets is considered
volatility, especially in the market.
Correct. So that's good. We realize good returns. So 2.3x MOIC on that is few people would argue that's not good. Yet we're trading at a 40% still discount to book in an environment where I think equity markets are considered to be highly valued, yes. Potentially a bit expensive.
Yes.
In that sense, we're still a little bit of an outlier. Yeah. And we still have growth potential. So in that sense, I think we're a unique company.
So what's the growth potential look like for FY26, particularly on the back of such a strong year in FY25? How do you continue that growth momentum?
Well, more broadly, I would say, if you look at our market, we are closely connected to the legal industry. Yeah. The legal industry is projected to grow further. So on the back of that, our industry will grow. The penetration rate of legal finance is still very low. So we expect that to grow within the legal industry. So that's going to give us some extra growth. And at the moment, there's a consolidation happening in our industry. 10 years ago, quite a few other legal funders have come into the market, and that is now reducing to a smaller group. So we see potential to increase our market share. So that standalone is quite good. On top of that, we think that the legal industry is going to go through a kind of a period of change. Yeah. AI is expected to have a disproportionate impact, especially on the legal industry, which is kind of suggested to be perfectly situated for that. Yeah. And as the specialized provider of capital to the legal industry, we expect to play an important role in how that industry changes as a result of these changes to the legal industry.
Absolutely. And finally, for our investors, over the next 3 to 5 years, what's the strategy for Omni Bridgeway?
Well, we've just gone out. The most important thing for us is to start providing returns to shareholders. So that's at the top of our list. We've repaid our debt. We've just come out as part of our results with a capital allocation and distribution policy that outlines, even when that book starts to return further proceeds, how we're going to be distributing that. And then on top of that, we want to continue growing the book. We have provided some clear targets on further growth of our management fee income, and we want to continue some reduction in our operating expenses.
Raymond, thank you so much for joining us from the Helm here, and I hope you enjoyed that episode of From the Helm with Bell Financial Group. If you did, be sure to subscribe to our YouTube channel to stay up to date with all exclusive interviews like this one, market commentary and insights.